Hello and welcome. This is IdeaGen TV. We are honored today to welcome panel moderator and guest Jigar Shah, president and co-founder of Generate Capital. Welcome, Jigar.
Thanks for having me.
So glad to have you here and your amazing panelists. I cannot wait to get started and hear what you guys have to say. With that, I will turn it over to you. Good luck, sir.
Thank you. As many people know, 2020 has been a year that many people want to hit the reset button on. But there's a lot of interesting things that have happened this year. Because of the global pandemic, there's been a lot of testing that's been done of the renewable energy penetration within electricity grids. Today, Europe has more renewable electricity on the grid than they have coal or natural gas electricity. And the grids have been fine. People have been able to maintain the grid. In the United States, you're having major reports that are coming out from UC Berkeley, the Rewiring America report, which shows that rapid decarbonization is possible on a spreadsheet. And so today, I'm joined by two amazing panelists who are going to talk about how we actually take those reports and those spreadsheets and actually turn them into something that looks and feels more real. And so I'm just really excited to have both Neil and Brad join me from IBM.
Hello, Jigar.
Hey, how are you?
Hey, Jigar.
It's good to be with you guys. Why don't you guys give a short introduction about what you guys do, and then we'll jump right into the content.
I'm Brad Gammons, as Jigar said. I'm the Global Industry General Manager, Managing Director for Energy, Environment, and Utilities. We actually added environment to our name about 3 years ago, just exactly because of energy transition and the need to get to net zero and the very important role the electric network is going to play in that. Neil?
Hi, I'm Neil Gerber. I'm on Brad's team. I'm the Director of New Energy and Blockchain for our industry, focused on a lot of the things happening on the edge and the kinds of problems and challenges, Jigar, that are coming next with this penetration we're talking about.
So let's just start from the basics. So there have been a lot of reports, whether it's the NREL Futures Report using the JEDI model, or whether it's Jesse Jenkins at Princeton University, or whether it's UC Berkeley. All of them have said that decarbonization is possible, maybe to 80%, let's say, or 90%, and that the grid can be stable, right? Have we actually proven that in real life? Do you guys actually believe that that's possible with the technologies that we have access to today?
I would say as we've gone through each stage of increasing the amount of renewable energy resources into the grid, we've watched that in the Nordic region in Europe and now across Europe and in certain parts of the US, California being one of them, is we've seen grid stability hold. And I think that's a credit to the overall energy system, the electric system itself. And the investments have been being made for the last 15, 20 years of placing this digital overlay on top of the electric grid. It has allowed a lot more insight, a lot more collaboration across different kinds of balancing and ancillary services that are available in the marketplace, giving more room for the transmission system operators to play. But as we electrify more and as we decarbonize, the topic of resilience is coming very, very high. It's always there. Reliability and resilience is at the core of what an electric provider does. But with more and more core economic areas or industrial areas that'll pick up to get to this level of decarbonization, like transportation and heating and cooling, there'll even be higher pressure on the resilience of the electric network itself. So do I think it's possible? Yes. Do I think it's going to take a very collaborative and interactive digital experience and marketplaces on top of the traditional heavy infrastructure or network infrastructure itself? Yes. And so there are still lots of investments that need to be made going into the future.
No, it makes complete sense. Neil, what about that? So when you think about the digital overlay on top of the traditional grid, it's a lot about, how we create the transactive grid, how we integrate distributed resources, right? How is that being done? And do you think the technologies exist to do that in a way that gives utilities the visibility they need to achieve reliability?
Yeah, it's interesting, Jigger. So we view this as sort of a four sets of market dynamics that are interrelated. I think we're sort of in level 2 right now. So the 4 that we talk about, first one is this network resilience layer. So your all the standard utility capabilities of reliability and affordability and security and safety have to exist. And what you see is as you move up the stack, that gets harder and harder to do. And then the second dynamic we see is around renewable integration. And you talked about some of the great how that's moved forward in several geographies where renewables is now almost everywhere the cheapest source, and 75% of new build now is renewable. So we're seeing exponential growth of renewable, but that's being built in the traditional model of the sort of centralized, most of it's utility scale central, if you look at the actual terawatt hours, and it fits within the existing model. It pushes it a little bit. It's a little bit less controllable and a little bit more intermittent. So it requires the utility to change a bit to manage that. But it's going to get way more difficult, we think, in the next phase, which is when we start to electrify whole other industries. Because if you look at the amount of energy used in, let's say, road transport and building heating, which are the two that they're moving fastest towards electrification, that's a huge increase in electricity usage, and that's going to put a big burden on the system just from an amount of energy, but also from where it's coming from. And it leads us to our fourth stage once you start to electrify at scale, which is what we sort of call the energy integrator ecosystem. But it's when the energy transition in our mind really takes place, where the grid topology changes. And we go from this sort of traditional centralized model, whether it's coal, gas, or wind right now, or solar, it's still central for the most part. But we start moving into the system where services are going to and from customers. And you have hundreds of thousands or millions of sources. They can be generation, they could be batteries, which are some of sort of demand and load, demand and supply, rather. So you've got this really complicated system that's sort of coming. And that's what it's going to take to get to the 90 or the 100% decarbonization. And in that regard, I don't think the systems today are in place. I think the technology in general exists to manage this, to manage systems of systems like this. But I don't think they're in place in the typical utility today. So there's a lot of work to do to get, from our 30 to 40% where we are now to that big chunk of a huge, a much bigger part of the economy relying on electricity as its fuel. Therefore, the resilience becomes extremely important. You're fighting against, gasoline that can be stored and has high energy density. So you've got a high bar to meet in terms of being resilient and making sure that, if somebody wants to switch an entire fleet of vehicles to electricity, they have to be sure they can always have access to electricity. And so it's a whole new game at that level, I think. And the technology exists, I believe, in the world. I don't think it necessarily exists today in the utility ecosystem.
So just building on that, when you think about when we started to really roll out the smart part of the grid, I think it was, at scale, really under the American Reinvestment Act in 2009, and there's a lot of smart devices put on there, and then you had big data that was tried to that people have been trying to overlay. How long do you think that process takes, right? I mean, given where we are today, 12 years after that legislation passed, and maybe 10 years or 9 years after some of the large scale deployments have occurred, is it another 10 years? How long does that take to really integrate, retrain a lot of the grid operators, figure out how to integrate all the software together? What is a realistic time frame?
I'll give a little bit of an answer, but I know this is an area you invest in pretty heavily, Jigar, and have a point of view. So I want to draw you into this dialogue after I comment and see what you have to say about this also. The investments are still being mined right now. So what I mean by that is there's a lot of distance that can be covered with what's there, with the sensing and monitoring and the availability of data. The real key is going to be, most parts of the world, is how regulatory reform and how the role sort of defined for the network operators and the retailers, and how they're allowed to collaborate, share information in a safe and trusted way, so that there can be more participation while there is still stability and reliability, not just at the transmission level, but also down at the distribution levels, where you'll have a lot of these new business models occur of people sharing energy, storing energy, bidding it into markets, that type of thing. So I would say the first is, how much can we get out of what we already have, and how much of that we're going to be able to monetize will be directly related to the kind of permissions that regulators and government officials will allow. What are your thoughts, Jigar?
Well, I totally agree, but I think building on what you said, as well as on what Neil had suggested, I think one of the things that I think about is the US electricity grid in particular hasn't really seen any load growth since 2003. That makes everything expensive, right? You kind of want the denominator to grow. It allows you to keep rates low. And so while the complexity level is high in terms of adding millions of new devices onto the grid, my sense is that you also get a way to pay for it. And so part of what I'm interested in is that you've got 50%, I think, is the estimates now from the Federal Energy Regulatory Commission, of the transmission grid is used less than 25% of the time. And so the asset utilization rates are low. And so as a lot of this data comes in, you get a lot of this smart stuff coming. It feels like you can actually get to higher asset utilizations, which means that now everything becomes cheaper, right? Because we're actually using the stuff we've already paid for more efficiently, and you're selling more kilowatt hours. And so it does feel to me like the opportunity is there, and that's certainly where Generate Capital is investing. But it also seems to me like it's a win-win all the way across the board, because I can't imagine the shareholders of electric utility companies love that they're selling the same amount of top-line revenue every year, but trying to make higher profits just by building more distribution and transmission stations. And so it feels like we're going to get a lot of the interests aligned again through electrify everything.
And I'll tell you, I think you're exactly right. It really plays to what we're talking about in the industry right now, from an IBM perspective, what we call electrifying energy, right? Sustainably fueling the future is our tagline to that. And I think that goes to your point, is as new demand sources come online, that'll give you a higher utilization rate of the existing infrastructure, and also put to use the data and systems and the ability to monitor and control that continue actually be rolled out. Is that almost any infrastructure investment bill that seems to be coming in most countries around the world, to be some level of investment in infrastructure as economies continue to recover from the pandemic. There's a piece of that focused on the grid, on how you bring in more green energy into the grid. So there's going to be investment here. So how do you do that wisely and then use that to drive electrification? Neil, what do you kind of think, because I know you're working on this very much right now, what are some of the barriers to more electrification? What has to be different about the grid for that to happen?
Yeah, so before I answer that, just back to Jigar's point for a second, I think one of the other aspects is what we're starting to see happening in other parts of the world, Europe, starting this, is the development of markets to solve some of these problems, more markets than we have today. And markets, the purpose of markets is to efficiently use assets, right? Use resources. So that's an opportunity, and that's also a risk that regulators and the ecosystem doesn't really allow that to happen at speed. And so we might find that we have the ability today to build a distributed energy resource-based market for distribution services that we can't do because we've got regulatory constructs that don't allow that yet. Or we've got utilities that feel that that's going to not fit their existing business model. So I think you've got a problem. You've got to get the utilities to think about acting differently. Being an integrator of energy services, not necessarily supplying them all, not being the monopoly who manages, owns everything. Many of the assets that are being put in, they won't have to pay for. They're being put in by others. And if you can use services from that and buy and sort of pay as you go, now you've got a whole other set of investment. To the point of how do we, really sweat the assets of if someone puts in storage, or they already have industrial storage, which a lot of entities do. If they can use that to provide services that prevent the utility from having to, spend more capital, you've got an opportunity to get way more efficient. And so, we're seeing some examples like in Europe around projects that are specifically focused on this, where some of the leading utilities are looking at the problems they're running into to provide these grid services in today's world with intermittent supply, less fossil plants to control, more varied demand, and how do they manage the grid in that construct, as effectively and as cheaply as possible. And they're starting to look at markets. And I think so that's an interesting area. And I'd be curious, Jigar, from your point of view, from a startup environment, from an investment point of view, does that seem like something that's attractive, or is there a concern that that would take too long to sort of get the ecosystem to support those kinds of markets?
No, I think you're absolutely right. I mean, it's actually even a problem in areas where you don't think it would be a problem, right? I mean, when you think about how efficient the market is, for instance, in Texas, where it's unyielding, right? It's unforgiving. They don't choose winners and losers, but everyone has access to the market. So if the market's trading at $9,000 a megawatt hour for 100 hours a year, everyone can make money doing that, even with thermostats, let's say, or behind the meter natural gas backup generators. Whereas in California, where they're far more prescriptive, you can't get access to those revenue payments. Even during this latest crisis, there was no way to pay a natural gas generator to perform unless the governor signed, some decree that allowed you to do that. And so when you say markets, I think we mean, really different things than people think that we mean. Like clearly, I think people think, the Southeast United States, where there really aren't markets. I think they're starting to create imbalanced markets in a few small things. But you would think that the California ISO is a market that, is allowing for all of these innovations to play and get paid. But that's simply not the case. One other area I wanted to explore is on storage. One of the things that's shocking to me is that electricity really is the largest supply chain in the world that doesn't feature storage, right? I mean, agriculture, transportation fuels. I mean, storage is an equal branch of government in those supply chains. In the electricity grid, everyone prides themselves on making sure that supply and demand match each other on instantaneous basis, which seems like a headache that they don't necessarily need to take on. But one of the things that we've learned, I think, is that storage just comes in many flavors and forms. It's not just battery storage, which I know gets a lot of headlines, but it's also, thermostats, right? Thermostats are really just thermal storage of people's homes, right? And allowing the temperature to flex between, plus or minus 2 degrees at the set point. Or refrigerators are thermal storage. I mean, even water heaters are thermal storage. I'm curious how you think storage plays in, and whether you think the cultural aspects of matching supply demand so exactly can be changed within the utility context to think about how you would store excess wind and solar, for instance, by making everybody's homes 2 degrees cooler than their set point.
We got a great example of that of some recent work we did in Copenhagen. I would ask the city of Copenhagen that I asked Neil to talk about, but I think there's also, and you touched on it, this social and cultural dynamic that has to be adjusted. And I think that the receptivity of understanding individual and business roles, corporate roles, and allowing for the energy transition is becoming a lot more clear. You can see that in the ESG measures that now corporations have to address, and in the commitments that are being made to decarbonization, setting clear targets. So as that occurs and continues to occur, and people understand, businesses understand, and more I see businesses coming on board with really focusing on the areas of energy efficiency that they can use and how they can participate in storage with their facilities. I think the culture is catching up with where the technology is, and we'll see more of this. Neil, maybe talk about the city of Copenhagen for a second, because it really talks to what Jigar just mentioned.
Yeah, sure. So Jigar, that's a project that we're undertaking with the utility in the Netherlands, focused around the city of Copenhagen with other ecosystem players. And the real goal is to be able to access buildings and aggregated buildings to provide flex services back to eventually the transmission system operator. So it's very similar to another project we've done with an entity called Equigy, which is also in the Netherlands, which is around using EVs and their batteries to provide grid services, specific grid services. And in both these cases, when one case it's EVs for now, the other case it's going to start with buildings. But both of them, the idea is the TSO needs a service. They're defined ancillary services. The aggregator goes and finds those services. The way that the service gets provided behind the meter, essentially, is up to that provider. So I think the way storage will go, at least in that construct, will be, what matches the service the best? What does an entity think they can provide the best service to the utility? What mixture of thermal storage, battery storage, generation might they want to put together in order to best meet that need? And then the market will pick which ones are going to be the most successful. So I think in terms of in today's structure, just by opening up the market to these new players through this aggregation, which doesn't even make them change the regulation very much, they can get access to a whole bunch of innovation around what's the best mix of storage, generation, and other demand response mechanisms to provide specific services that are getting more expensive in most utility such areas. The other topic on storage, which I'm curious on your view a little bit, Jigar, is seasonal, the long-term view,
Yeah.
because a lot of what drives capital expend in the utility industry isn't necessarily the 2-hour, 4-hour. It's the, I've got to build for the summer, and then I got to, I have that sitting empty during the winter. So seasonal storage, I think, is a whole different problem.
No, it's a great question. Let me ask you one first before I answer that question. On the electricity case study with EVs, one of the things I'm curious about is you're going to see a huge expansion of electric vehicle sales. I think you're already seeing it in Europe this year, and the US is growing fast as well. Where are we on the regulations and the standards to make sure that the charging stations and other components that we're installing now actually can do the things the utilities want them to do? Are you forced to retrofit these things in a pilot, or are a lot of these electric vehicles and charging stations coming with this capability now?
So in the case we've done, there's the charging station may or may not be the governing entity here. For example, in the case of using Teslas, you can talk directly to the car. And so the car, you can make the negotiation with the car, like we've done in the Equigi case, via a blockchain network, so that the car is agreeing to, let's say, not charge for 5 minutes in exchange for some payment, and then it simply sets its onboard control to not charge for that period. So it's not necessarily requiring the charger to have the intelligence in it. In other cases, I think the charger will be that point. A meter could be that point. So I think you'll see a variety of different mechanisms about how do you actually have the interaction with the specific distributed energy resource device. I'm not an expert in the charger standardization world. I do see it continues to boil a bit, and I know there are a few standards still duking it out. But I think this, the access to the car itself can be done without that being completely resolved.
That's great news. To answer your question on seasonal storage, so the way that I view seasonal storage is very similar to how we do natural gas today, where you basically produce natural gas all year round. You have high points in terms of demand, and you store the excess natural gas underground in salt caverns, basically. So I think you're going to see something similar where you basically set the electricity grid to run super hot. So you actually set it to run at the maximum capacity can, which would far exceed demand. And then what you're going to do is to take the excess electricity and do things with it that decarbonizes other sectors. So for instance, the reason I'm such a huge fan of green hydrogen is not because green hydrogen is the cheapest solution, but it is the most technology mature solution, right? We already have $130 billion a year hydrogen industry. And so you have large companies who know how to handle hydrogen and what to do with hydrogen. And so if you create excess hydrogen in the spring and fall when you have very little HVAC load, then you can move those molecules into the ammonia industry for fertilizer. You can move those molecules into the transportation industry in the future. You can move those molecules into natural gas by combining them with a carbon molecule and putting it together. So you're in a situation where I think you have these solutions where you don't have to return the product back to the electricity system, which is, I think, the constraint that everyone is fooling themselves with. I don't think that the best idea is to store the power and then 3 times a year return it back to the grid, right? I think that generally is not going to be a great idea. But there is a way to actually create a useful work product. I mean, you could even create steel. You could imagine steel and aluminum facilities actually just running seasonally because the power is so cheap that it's worth doing. There's lots of industries, frankly, that can run seasonally. And so you could see those actually transforming themselves. Like, for instance, there's chemical facilities in Texas now that are looking to move away from the Gulf Coast and move to West Texas because their largest expense is energy. And they can get power practically for free from the wind power that would be otherwise curtailed in West Texas. And they're finding that that's actually a cheaper way, and they're actually getting long-term offtake agreements for the chemicals that they produce from their facilities. So I think you will see a lot of surprising movements of industrial facilities, which frankly are not permanently placed. I mean, you think that a $100 million facility can't be moved, but some of these folks use $400 million a year of energy. And so you can move them in a moment's notice to a node where you have congestion and you have a lot of excess power production such that there's a lot of curtailment. And so my sense is that is going to be seasonal storage. It's not going to be the physical seasonal storage where you think about putting it in something and then returning it back to the electricity system.
Yeah, I think that goes to the other topic, which is this new entrance and the collaborative nature. When you see the super majors, the oil companies coming in heavily into this industry and other players, what you're talking about from an industrial use is interesting, but it requires a much stronger interrelationship, I think, between these other industries and the utility industry. Once again, this idea of opening up, where the utility becomes more of an orchestrator of the energy system and gets paid for services to manage that piece. But other players have to come in and be part of this. Bitcoin mining is an example of what you just talked about, where they move. IT data centers are talking now about moving compute loads around the world depending on energy costs. And that's being done. So
it's absolutely right. And what's surprising to me is that I think all three of us are talking about the centrality of the electric utility, right, in being that organizer. And so it's surprising to me that they're fighting this change, because we're actually trying to anoint them, the official traffic cop. And I think they're pushing back and saying, no, we like the model from 20 years ago. So I'm interested in seeing whether you think you're making good progress and headway in convincing these electric utility companies that this future is actually brighter for them than the past they're leaving behind.
Jigar, I don't know that it's the electric utilities in a lot of cases. I think it is a culture that's emerged from the way regulation has been set and the way the working relationship has been between the electric systems operators, the suppliers, and the network operators themselves. And that's what needs to be broken. I think the electric utilities, given the opportunity, would willingly and in a very energetic way enter into the market that we're discussing. So I think there has to be a shift in people understanding the economics like you and Neil were just describing, and to begin looking at what has to change in the regulatory construct. And interestingly enough, a lot of this is based on trust. Is just that, and that the regulators and governments understand how essential that network is, and the importance of the digitization and the investments we made that will allow for everything we're discussing, to heavily electrify other industries, to decarbonize, but also huge economic advantages besides decarbonization, because it could be a much lower cost solution, which is good for the whole economy. So I think a lot of focus is going to have to be on education, building understanding of the benefits, and then a lot of time spent on how do you more rapidly adjust regulatory models to incentivize or just set free. Sometimes we get stuck on incentives, and some of it may just be setting free and giving wide guide rails to ensure that you don't get too far out of line with the core necessity of reliable electricity supply at a reasonable cost, and allow for more innovation. So Jigar, I know we've been talking for a while, and the three of us could talk forever. But I wonder if you could bring us home and give us some final comments to our panel today.
Well, look, I mean, I think that we're facing a lot of challenges globally today. I don't think 2020 is going to be viewed as a year without challenge, but I do think that people's minds have been open to the possibility of what we can do with planning. And I think whether you think about the Green Deal that's been, pushed in Europe, or whether it's a lot of the state-by-state policies that have been pushed in the United States, it does feel like the next 10 years is really going to be about implementation at scale. And so, in that, I think you're talking about moving from 300 billion a year of climate solution implementation to close to $1 trillion a year of climate implementation every year. And so it does feel like this is getting real, and that the change is occurring at speed and scale. And so I am hugely impressed by IBM's leadership in this space, but also many other entrepreneurs who've decided to throw their hat in this ring. It's going to be a very exciting time.
Like yourself, we believe very thoroughly that it's about an ecosystem to make the shift, and ecosystem also includes all the people that are consuming the energy and the role that they see themselves playing. So, Jigar, thank you for your leadership on the call today and hosting with us, and we appreciate all the audience that have hopefully come online to watch and learn. And I know all three of us love these kind of conversations and would love to talk to you if you want to continue the conversation. Thank you.
My pleasure.